Hey, good afternoon, everybody. Going to go over our Forex trades for today, August 2nd. It is a couple of days worth of trades. We did close out trades Friday morning, even though we weren't in the office. And then last night we had some action. So we had 6 trades over the last couple of days, pulled out 19.7 pips on a size adjusted basis. We're going to go over them in a second. First, just want to talk about some important economic news that came out recently. Excuse me. Friday, GDP came out for the United States, complete shocker. Came in at only 1.2%. Estimates were over 2%. Like I said, it came in at 1.2%. And then in the first quarter of this year, the government revised the number down to just 0.8% growth. So terrible news there on the GDP, which is obviously one of the biggest numbers of every month. Came across an article talking about our entitlements in this country, including Social Security. There's over 160 million people in the United States getting checks from the government. It's costing the government $3 trillion a year. If you call that's entitlements, right? If you call that an entitlement economy, it's the 6th largest economy in the world. That right there is scary. Our debt is growing. It's now over $19 trillion. Growing at about $1.6 billion per day. Basically, the government needs to print $50 billion a month, and they do that via treasury auctions just to keep up with that $1.6 billion a day. That's increasing the money supply, and it's impacting the dollar. It's impacting everybody's standard of living. So if you wonder why the dollar doesn't buy what it used to buy years ago, that's one of the reasons. Another thing came out over the weekend. Real assets, which include real estate, collectibles, and commodities, are at an all-time low versus financial assets. That's going back. The chart is going back to 1925. So all-time low. Real estate, collectibles, and commodities at an all-time low versus financial assets, i.e., stocks, bonds, whatnot. Let's see. Goldman Sachs downgraded the stock market. What else? Let's see. Okay, what else came out? Yesterday, ISM manufacturing came out. Missed estimates. Construction spending, completely missed estimates. Came in at a negative 0.6%. Was supposed to come in at a positive 0.5%. Terrible there. Construction spending is at 5-year lows in this country. Not good on that front. What else? Royal Bank of Australia, they cut their interest rates last night, but everybody was expecting that. This morning, U.S. personal income growth slumped to the lowest level in 2013, while spending was rising. Obviously, households are not making enough money to sustain their standard of living, and many of them are going into credit card debt to meet their everyday bills. So not too much good news there on the economic front. So let's get to the trades. We have 6 of them to go over. We have Swiss franc Japanese yen to the euro yen, which was a correlation. Okay, we actually had this for most of last week and was able to close it out Friday morning after the GDP numbers came out. So on Swiss franc Japanese yen, we were long from 107.389, sold 105.854. Losing 153.5 pips, or adjusted for size, 30.7. But on the flip side, we were short euro yen at 116.361, covered 114.421 for 194 pips, or size adjusted 34.9 pips. We had 20% of our normal size on the Swiss franc Japanese yen, and on the euro yen, we had 18% of our normal size. Euro yen's more volatile than Swiss franc, so you're going to take a little slightly smaller position in the euro yen. New Zealand dollar, Canadian dollar was also, we closed this out after the GDP numbers. This was just a swing trade. We had 20% of our normal size, long from 0.93557. Got taken out 94.101. That was our price target, and you can see what it did. It started to rally and continued to rally throughout Friday and Monday, and again this morning as well. Euro yen was a scalp last night. We had 50% of our normal size because we were risking a little bit more than we wanted to. 114 We were long 114.255, sold 114.295, picking up 4.0 pips. And you can see what it did. We got out way too early, but there was news coming out from Australia, so we were being a little cautious there. So we took the 4 pips and ran size adjusted 2.0. Same thing with pound dollar. Was a scalp, 50% of our normal size. Long from 1.31822. Again, they're just scalps, even though, we may be risking more than the 30 pips on a pure scalp, it's still considered a scalp. So we sold 1.31861, picking up 3.9 pips, or 1.9 on a size adjusted basis. Again, that news was coming out from Royal Bank of Australia, so wanted to get out. You can see what it did, obviously. But we'll take that 4 pips and move on. And we have one more, which we didn't put on the graph, on the charts here, was New Zealand dollar, Japanese yen. Let's see here. This was actually supposed to be New Zealand dollar, Japanese yen. So let me see here. New Zealand dollar, Japanese yen. So this was more of a swing trade, but again, with the news coming out from Australia, knowing New Zealand economy and Australian economy is very highly correlated, we wanted to be out. We were short this from yesterday, late afternoon, 73, early evening, 73.418, right in this general area as it was coming down. And you can see it just wouldn't break down. We ended up covering 73.374 for 4.4 pips. We only had 20% of our normal size, so we picked up 0.8. Sorry for not having it on there. By mistake, we put it on the wrong chart. So we picked up 4.4 pips, size adjusted 0.8. You can see what it did ultimately was the right thing to do. But again, with that news coming out from Australia, we didn't want to risk too much there. So in the end, the 6 trades picked up 19.7 pips on a size adjusted basis. So we'll take it, and we would take that all day long. So that's it. We're going to wrap it up. If any signals come out, they'll be coming your way. If you're still trading now, good luck. And we'll be back tomorrow, assuming we get some action tonight or tomorrow morning. Have a great rest of your day.